time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product Education at Options Play. Thank you both for being with me on this Monday. So Jessica, how are you feeling about the markets? I mean, you see today, pretty, great day. Most of the sectors are higher. I'm seeing the consumer discretionary, utilities, real estate leading the way. The S&P is gaining. Some of your thoughts.
Absolutely. I think we certainly have a very big week in the market after a very big week last week. So lots of potential catalyst. But I find it's really a Fed week. We've got to wait on that. It's going to be interesting to see Amazon earnings and, of course, Apple earnings. But I am excited still about AI, the CapEx spending. I think companies are more efficient and lean, and there's more control of the narrative, meaning even if there is better than earnings, but any misses, really, it's not from unforeseen circumstances. It's we're spending more. So it's more of control within companies. And I see that really as a positive.
Right, understood. And then, so now your first name that you're following here today is First Solar. Some of your thoughts, it's sort of had a choppy trade of late, hit a low in November. Where do you think it's headed and why?
Absolutely. So First Solar was actually a technical scan that I ran this morning. And normally I don't come to you with too many technical scans. So interesting. Nonetheless, I'm showing it as a trend reversal. And so I want to structure a neutral to bullish trade. And the way that I look at markets technically is really what I like to call a qualitative, quantitative view. So I look at the 13, 26, and 40 weekly moving averages. Those are indicative of 1, 2, and 3 quarters worth of prices. And since we look at the market quarterly, I want to see prices increase, and we'll see it relative to earnings. So that's how it's qualitative, quantitative. Just looking at it, if markets are truly fundamentally driven from that technical perspective, then that should be reflected with the 13, 26, and 40 weekly moving averages. So I see that rolling over and going above my support line or support zone of 175 to about 177. And on top of that, due to the increased implied volatility from earnings that are coming up with First Solar, there is a really good high probability trade that I know we'll get to in a moment.
All right, good. I want to hear all about it. Ben, take a look at the charts for us, please.
Yeah, Nicole, good morning. Jessica as well. First Solar's been shining bright for the most part as of recent. It's been rewarding the bulls across multiple timeframes. I'm seeing a bullish pattern playing out here and a pretty well-defined trend up. This is exactly what I like to look for. I like to look for patterns that repeat themselves and then ways to make money while trading even when you're wrong. Let's start with the move up that we've seen just since the beginning of February, end of January. We found a bit of a double bottom around this 135 level. You can see a big move up in reaction to earnings. Sideways consolidation here, and then again that move higher to 188 where we started to balance out a bit at this upper level here. Let's just take a look again. We've got a 60-minute candle chart up, and I've identified 2 areas of consolidation that have formed here. We're talking around 150 and then currently balancing around this 180 area. So kind of random, not a lot of conviction within this range, overlapping, horizontal, but you can see value moving higher here, right? And for me, when I look at a chart, Nicole, Jessica, as a technician, you don't really care so much about the symbol in the top left corner or the product that you're looking at. This is what you're trying to identify, trend and value. Take a snapshot of this image here and remember it because, well, as we add a little time on, you're going to see almost a similar pattern. Now, we're actually adding quite a bit of time on, going all the way back to the beginning of 2021. But again, similarly, 2 areas of value that have formed here. And you can see, again, that area mentioned here around 180, but you can also see that area down around the $80 level here that was into the summer of last year. High conviction to the upside. You can see we posted new highs into June, July of last year, and then have come off a bit since. So not necessarily what the bulls want to see, but getting back above this pivot line I think is significant, and it opens up a door for a retest of that high that we saw again last year up around 230, 240. I just wanted to show you one more chart to kind of zoom in on the last year of price activity. We're holding above the 200 day moving average, holding above the 50. The stock is currently up around 5% year to date, but we're also seeing some good strength here in this RSI, the relative strength index. So suggesting there could be potential upside momentum here still to come, Nicole.
All right, thank you for that. I'm curious about the trade here, Jessica.
Yeah, absolutely. So this is a neutral to bullish trade, the way that I'm structuring it. So we're selling premium. There is a heightened implied volatility. And normally when I'm selling premium and I'm creating a credit spread, so this is a bull put spread, I look to capture 30% of my overall risk, which is the difference of the two strike prices. I'm actually able to get 44%. So that's very much more high conviction, which makes it a high probability success trade. The way I'm structuring it is I'm selling the June 7th 175s and buying the 165s. I'm able to collect about $445 altogether. So that there is 44% of premium that I'm capturing relative to the risk. I just need first seller to stay above that line of conviction that Ben pointed out, 175, and this trade would be successful. Just need to
All
stay where
right.
it is.
Next up.
Yes.
Yeah, right. Next up, we're watching American Express, Evercore ISI, and also Wells Fargo recently upping the price target for American Express, which right now is at 236. Some of your thoughts on where this could be headed and why?
Yeah, absolutely. And you're so right, as always, Nicole. It is a great earnings beat. They've got that high credit quality consumer base. Their build businesses are reaccelerating, which is interesting because we see that across the airlines as well, with return back to work and a lot of corporate spend. And they have the fee-based cards that's adding to their revenue. Their US consumers saw an 8% increase year over year, and large and global enterprise was 5% year over year. So I really think that high credit quality consumer base is something that we're going to see strengthen, especially as we're talking about this restrictive Fed environment. American Express seems to be coming out on top, and I still see them doing that as well.
Right, understood. I mean, look, and you're still seeing this very resilient consumer. Ben, some of your thoughts on the technicals here for American Express today?
Yeah, they have been coming out on top, that's for sure, Jessica and Nicole. This chart, very bullish across multiple time frames. Let's dive right into it. Exactly what I look for, the two phases of development and the well-defined transition between the two. For that, we can begin with a 15-minute candle chart. You can see sideways consolidation into earnings, and then a big move up here in reaction to the results. That imbalance that gets created transitions back into a balance where we have now value, which is being formed at a higher level. So again, 15-minute candle chart, just looking at the last few weeks of price activity and the event that we saw in reaction to earnings. You can see two areas of consolidation that are formed, 218. 237 is currently where we're balancing right now. So you've got a well-defined upper extreme around 240. We could broaden this out a little bit. I'd be keeping an eye on that lower level around 228. That might be the lower extreme of this range here. But let's take a step back. We don't want to put too much weight into this 15-minute candle chart. When you add a little time on here now, a daily candle chart going all the way back to, we're talking June of 2022, you're going to see a very similar pattern playing out. Migration of value to the upside. You're going to see key areas of value that actually held, and you can see how we're now in a vertical phase trying to break out of this range that we just recently were forming around 220. You can also see this extremely mature area consolidation that formed around 165. We're talking multi-months of just random overlapping and just not a lot of conviction. Well-defined upper extreme that gets established, and even a pretty well-defined lower extreme. So range-bound trade transition to high conviction, back into that horizontal, and now again we're trying to break out here and establish something higher, or extend this range at the very least. But hey, no matter how you slice it, a very bullish pattern here as well. Let's take a step back, looking at the 50-day, the 200-day moving average, and again a daily candle chart. You're going to see RSI is somewhat limited in terms of this move to the upside relative to what we're seeing in price. So a bit of a divergence here, which is going to be something to watch this week, right? But let's keep an eye on that. Holding above the 50, holding above the 200-day moving average. Look at the stock here, up 26% year to date, Nicole. Again, a major win in many ways for the bulls here across multiple time frames, signaling the technicals adding up to and suggesting that the fundamentals Jessica was just talking about are really being supported here.
Yeah, I mean, look, when we see the fundamentals here and you watch the moving averages, you see that it is a strong player. Final thoughts on this one, Jessica?
Absolutely. Trade structure, I'm looking at a covered call for this one. So owning this security, it's a great way to add yield while participating in capital appreciation with that bullish thesis. So selling a June 21st, 260 covered call. That gives me room all the way up to 260. So I'm capping my upward potential there. I'm okay selling American Express if it goes to my strike price. I'm collecting $117 altogether. Now that seems minimal when considering yield, but if you were to annualize that and consider doing this consistently, consistently over 45-day periods, that actually adds a yield of about 3.49% to my overall portfolio in comparison to their dividend, which I think is a little above 1%. So it's a way to participate in capital appreciation while also adding yield to your longer term portfolio.
All right, and last but not least, we look at Alphabet, which jumped up to new highs recently of as high as 174 and change. We had the strong earnings last week, which really helped to turn the market. Where do you think it's headed now, and why?
Absolutely. You know, Nicole, how much I love AI, and I try my best not to talk about it all the time, but it's inevitable because of the huge amount that it's playing in the market right now. But this is promising because the beat that it had on search and an uptick that it had in search generative experiences. And of course, the TikTok discourse, there is a beneficiary that Google will be. I do spend a lot of time on TikTok and I have a presence there, and the creators are definitely saying that they're moving over to YouTube. So I'm going to listen to where they're going and also see that reflected within the numbers, seeing an increase on YouTube with 21% increase year over year. Their search was 14% quarter over quarter, and they beat on cloud. So that's 3 revenue streams that they beat on. Cloud was 28% year over year. Now, the big concern I see with Google is they had a big CapEx spend. Their increase was actually 91%, which is really, really big. And that was year over year from their spend comparison to last year. But that means the AI race is on. They are investing. We saw that Meta is doing it. Last year was the year of efficiency. There's free cash flow, and that's important to know, especially with this higher rate environment that we're with. But beating on those revenues, it's a big player. It's a mega cap. I really think there's a lot more we're going to see within generative AI and Google specifically.
All right, thank you for all of that. And we're going to take a look now with Ben, looking at the charts here. Some of your thoughts on the charts, Ben?
Yeah, Nicole, Jessica's not alone on this one. It seems like the broader market feeling the same way, or at least buying into the recent narrative. You can see the move behind me. It's a 5-minute candle chart, and it really speaks to some of the strength we've seen just as of recent. The high conviction move up, and we're kind of leaking lower here, but recently trading up to just shy of 182. Stock was trading down around 151 prior to earnings last week. And this was a big part of that broader market rally we saw, right, as the market kind of pushed back on some of those, that rate cut sort of dark cloud or pushback on some of those cut expectations cloud that was hanging over us. And earnings really helped that out here. Let's take a step back away from this 5-minute candle chart and take a look at the significance associated with that move last week relative to the longer-term trend, which has been pretty well defined to the upside here, bottom left to top right. You can also see the gap up here that's playing out here. Look at this on a daily candle chart. You're going to see, again, a high conviction trade to the upside. Now, this move that we just saw, this gap, higher highs, higher lows here, kind of reminds me of the move up that you saw back in July of last year, if you remember. High conviction move up through that 125 level, balanced out around 130. The bulls wouldn't mind seeing a little consolidation at this new upper level that forms value after, again, imbalance and ultimately in continuation of the trend we've seen. That's what they're looking for, right, is something to form above this 155 level. So they're on the right track here, that's for sure. Let's take a step back here. I wanted to show you where we are on the longer term, where we are relative to the 50 and the 200-day moving average, and also the RSI, which is starting to join in here. It's going to be key to watch today and this week to see if we can get some follow through in terms of price, if we can hold this upper level. But yeah, a big move away from the 200-day moving average, a big move away from the 50, and a reflection of that bullish sentiment as well. These are 3 names that I can, again, understand why Jessica's very bullish across the board on all of them.
Wow, it's nice when you get some affirmation like that. Final thoughts, Jessica?
Of course. So this one as well is neutral to bullish. So selling the June 7th 165 puts, and I'm collecting a premium of about $3.19, so $319 total. And the intent of this is I'm utilizing the obligation found within the short put. I'm obligated to buy if this moves down adversely. And I'm okay with that because I want to add it to my longer term portfolio, but I reduce my overall risk exposure in comparison to buying the stock because of the premium that I'm collecting. So it's a way that I utilize options, and oftentimes options traders do by buying and selling stocks is selling puts to buy and selling calls to sell.
All right. Great to see you both. Thank you for kicking it off this Monday. Really appreciate it. Jessica Inskip at Options Play and our own Ben Lichtenstein there on the charts for the big 3 today. Thank you.